Today I want to talk about the VIX and what is it and what does it mean, and can we interpret anything from its actions that we can actually see. So the first thing is the VIX was developed by two gentlemen in 1987. It was a theory, and it actually is a theory about what is the future worth of index options, like the next 30 days type of thing, okay? And here is the formula, and they have a brief description there. I have no idea what it stands for or understand it at all, but you can certainly look at it and figure it out. And then below is the brief history from when they invented it until it went live. So what do we want to know from this? Well, here's the VIX index since 1993 when it came out. And you can see in the middle there, about 5/8 of the way across, is the great financial crisis, which goes to an all-time high. But what I want to point out here is notice how it kind of like went up and down. There was days up and down, and then finally it took off when the great financial crisis really hit its full stride. And then I want you to look at what happened to us, a Friday ago, 10 days ago. Notice it's straight up. It went from like 10 to 60 in an afternoon. This is obviously, you can see the entire history of the VIX. This was unprecedented. And that is the question we want to address. Why? Well, the first thing is let's figure out who bought it that day. So I think we can be pretty sure that it wasn't you or I, okay? We just don't do it. In fact, if you go through my comments, there's so many people asking, how do I buy the VIX, okay? I think there's an ETF out there. I've asked some of my clients, but no one really does it, all right? So they're the big firms. When I say that, the big financial firms that buy it. And why would a big financial firm buy the VIX? Well, if you're a GSIB, a globally systemic important bank, okay, which we have 8, and there's 29 in the world, these banks are huge. We just conceptually don't understand that. They own hundreds of thousands, if not over 1 million or 2 million CUSIPs, as they're called, names. They are long every kind of security in the world. They are short every kind of security in the world. All these positions are in multiple currencies. Some of them are done through derivatives, some are done through options, some are done in a combination of both. Some own the underlying stock, some own an ETF. What I'm saying is that these balance sheets are so complex, so many different positions you're holding for clients and vice versa, counterparty exposure with other GSIBs. This is a very, very complex balance sheet. So in other words, there's no way that firms can manage their risk name by name or CUSIP by CUSIP, depending on how term you want to use. So they've come to adopt the VIX, which is actually a formula for future index option pricing, and we've kind of made it into a fear gauge or a fear index, okay? So when you get scared, you buy the VIX to protect yourself. You say, well, how does that protect you? Well, I'll post a video, I'll pin the video from a prior video of mine about how my GSIB managed the VIX, and you can go through that. But basically, the answer is this. They buy the VIX when it's low, and they just keep buying it every day, and they put it on the side, okay? And what it is, it's for a rainy day. Because of the myriad of positions that they have, there's no way when something happens in the market that you're saying, I'm gonna buy this, sell this, do this. There's no time. Look at what happened in one day, okay? So what they do is they buy the VIX. So the positions on their books, some go up that day, some go down. Look at own gold that day, gold went up, but everything else went down. And by the way, these GSIBs own commodities, they own leasing contracts, they own airplanes, they own everything, okay? So what it shows is that these big banks were terrified that day. And the reason that they're terrified is that the entire investment platform of the world is based upon the yen carry trade. This is what people do. So this article comes from the Standard, okay? And I'm just saying that now the Chinese are worried that the yuan may surge and have fresh volatility because of the yen carry trade. So let's follow the concept here. What happened? China is a great exporter. In came the dollars, right? Because guess what? Trade is done in dollars. So now they get the dollars, okay? So what do they do with it? They put it into yuan, they borrow against the yuan, and they go out and do, again, buy into higher yielding securities, okay? It's called the yuan carry trade. Not much different than the yen carry trade. But now we have a situation where, one, we're talking about cutting our interest rates, okay? And as we know, the dollar's traded down a little bit, not a lot, right? It's about 101. But if you're sitting there and you're holding dollars and you think the yuan is going to go up, all right? So does the U.S. cut its interest rates? And if you do, and the yuan's going to go up 3 or 4%, you're going to see major selling of the U.S. dollar, okay? Because they're not going to hang around in the dollar, even with the higher yield, when they can go get 3 or 4% on their money because the yuan's going to move up, plus they can get the yield from the yuan on the other side. So this is what everybody is facing in the world. When you think of our investment pyramid, we're going to talk financials, okay? The bottom of the barrel, the bottom of the pyramid is obviously like commodities and stuff like that. Next step up are the currencies, all right? So the basis of our financial system are our currencies. And so when the currencies have been aligned a certain way for decades, right? Think about the Japanese yen carry trade. It's been going on for 22 years. They had 17 and a half years of negative interest rate, all right? Everyone did this, including the Japanese. So what we're saying here is that the basis of the financial pyramid is now realigning itself. What currency is going to go up, what currency is going to go down. And when you're a bank or you're a financial institution or a hedge fund, and you see that this trade could flip on how people are borrowing or selling currencies that all your investments are based in, you get terrified. And that Friday, the banks were terrified and they drove the VIX up. Okay, now the VIX has come back down. And we know that the Japanese have come out and said, oh, we're not going to raise the interest rates because the markets are unstable, all right? And the government, we did not come in and cut our interest rates. We said, look, we're looking to do it in September. So this has been my fear. So anyone who's followed me knows what my fear is that I believe America, USA, in a vacuum, I don't see the reason why we should cut interest rates. You can go back and look at my videos. I explained everything. And my worry is, as I said in one video, is I don't know which is worse, that we cut the interest rates by 25 basis points or we raise the interest rate by 25 basis points. I'm not worried about the U.S. economy per se. What I'm worried about is what happens to the alignment of currencies around the world and all the investment firms that are invested in the yen carry trade, the Swiss bank carry trade, the yuan carry trade. All these trades are now up for grabs. And until we can see our way through this, I think you have to be cautious. What do you think? Like and follow and let me know.